Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you two LEAPS options that you can buy right now, not next week, not next month, right now in order to help you grow a small account portfolio. The second LEAPS, I'm going to show you how to use this LEAPS option in order for you to make consistent income as well. So if you are new to options trading, or you're trying to use options in order to help you supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be introducing you to two LEAPS options that can be bought right now in order for you to grow a small account portfolio. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. Now, when I say we're going to get down and dirty with options, I simply mean that I'm going to be giving you a step-by-step walkthrough of these option strategies and the stocks I'm going to use it on in my personal portfolio in order to grow my account portfolio even more. Now, the first stock for today is going to be none other than ServiceNow, and that ticker is going to be NOW. So let's go ahead right away and we're going to open up the chart to see how ServiceNow is doing. We're going to start off by going to the 1-year outlook. Now, with the 1-year outlook, the current share price of ServiceNow as of making this video to the top left right here is going to be $108.06. This stock has come down drastically. For the 1-year period, you could see it's down $76. Now, most of you guys that have been watching this channel for a while, you guys know I like to buy good companies that are severely undervalued. I just think it gives me a lot more upside than downside. Now, with the 1-year chart, the two main indicators I like to use is going to be this blue line right here. This blue line right here is what's known as a trend indicator, and its name is the 200-day moving average. Now, what the 200-day moving average does is that it tells us where the share price should be trading for the last 200 days or 6 months. So the price that ServiceNow should be trading at is going to be $170.93. So let's say 171-ish. Currently, you can see the share price is way below that price. So in my mind, there's a lot more upside than downside. Now, the next indicator I like to rely on, if we go even lower, you're going to see down here is going to be the RSI. RSI stands for Relative Strength Index. And unlike this trend indicator up here, this RSI here is known as a momentum indicator. It simply tells us whether a stock is going into oversold territory or overbought territory. Now, ServiceNow has an RSI of around 37, so it's going towards oversold territory. So once again, another indication to me that this stock has more upside and downside. If I were to make a decision based on just the 1-year outlook, this is going to be a hands down easy decision for me. However, let's just go ahead to the 5-year outlook to see how that's doing. So with the 5-year outlook right now, you see that this chart is even worse than the 1-year outlook. The current share price is still below the 200 moving average, and the RSI is still moving down. So I'll be extremely bullish on this stock. Now let's go ahead. We're going to go back to ServiceNow and get into the options. Now for that, what we're going to do, we're going to go ahead to trade now options down to the bottom in order for us to go ahead and open up the options chain. Now, for those of you that have been watching the channel for a while, you guys already know what this is. For those of you new to the channel, welcome. All this information down here in its entirety is what's known as the option chain. What the option chain does is that it gives us enough information in order for us to go ahead and make a very informed decision before getting to any options contract. Now, speaking of options contract, before I go ahead and give you a step-by-step walkthrough of how you could use ServiceNow and the other LEAPS option in order to help grow your small account portfolio and make consistent income, I would like you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second favor you want to do yourself, always make sure to have an exit strategy. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And lastly, This video is for educational purposes only, and it is in no way constitute financial advice. It merely represents what I'm doing with my own personal portfolio. Now we got that out of the way, let's go ahead and get into this trade. So I'm going to go first to buy. I'm going to go to call. I'm going to proceed to choose my strike date. The strike date I'll be going with is going to be far out because I want to do a LEAPS option on this. For those of you who are new, by the way, LEAPS is an acronym that stands for Long-Term Equity Anticipation Securities. So the date I'm going to be choosing is going to be January 21st right here, 2028, and that gives me around 691 days to expiration. So now I have my buy right here, I have my call right here, and I have my long dated expiration date. I'm going to proceed to choose my strike price. In this case, I'm going to go ahead and choose my strike price below the current share price. Can you choose a strike price above the share price? You absolutely can, but if you do that, the odds are not going to be in your favor. So the price I'm going to be going with is going to be this price right here, which is going to be $100. The $100 represents a very strong level of support that the stock has been had since 2021. So although the current share price is 108, any one of these prices can work out. But I want to put the odds in my favor even more. So I'm going to go ahead to the level of support, which is $100. I'm going to go ahead and purchase this. Because this is a buy option, I'm going to have to pay. The amount I'm going to have to pay is going to be $36.80 in the options world. However, in the real world, that's going to work out to be $3,680. And that's simply because each option contract does contain 100 shares. So you simply multiply your 3680 right here by 100, and that should give you $3,680. Now, how do you win with this option? I'm going to go ahead and give you a walkthrough of how you win with this option in just a second. But before that, I want to let you guys know, if you guys are looking to get some additional help with options trading, then I would like to suggest that you guys go ahead and become part of the Consistent Income team. You could do that with two ways. You could either do it right through YouTube, or you could go directly to the website. The website is going to be pushholdings.net. Once you're here, feel free to explore our products and services and also our free education. When you become a member of the Consistent Income team, everyone is going to get, as a perk, you're going to get a free options tracker. That's going to be your very own, that you could track your trades. More important is that you're going to be able to see my personal option tracker, where you could see every single trade I do, when I enter, and also when I exit, and also my P&L and everything else. So if you guys are interested in becoming part of the Consistent Income team, I will leave the link in the description below. Now, since I'm here, I'm doing a LEAPS video. I just want to show you guys that I do have a LEAPS right now on one of the most popular stocks in the market, which is going to be SoFi. And the expiration date is the exact expiration date I'm using for this video, which is going to be January 21st, 2028. So let's go ahead and get back into the now options. So now that I have this LEAPS option in my portfolio, this is how I'm going to win. All we need to happen is that we need this share price here to go up. Once the share price go up, your overall options value is going to go up as well. And then you could go ahead and feel free to close this option whenever you think you have generated enough profit. I have chosen service now as opposed to the others because I like how this stock is doing, and this stock has some very, very strong fundamentals. So I expect this stock to go up. I expect this stock to go up very severely as it came down. So when the market swings, and it will swing, I expect the share price to go up even further, and you will make in some gains on this really, really quickly. Now, the next stock that I'm going to be using for a LEAPS option, and that's going to be none other than MRVL Technologies, and that's going to be MRVL. Now, I'm going to go ahead and show you exactly why I decided to choose this stock at the end. But for now, let me go ahead and show you the options. So now we have MRVL. We're going to go to trade MRVL options down to the bottom to open up the option chain once again. So we're going to start off buy, then call, and then we're going to go ahead and choose our expiration date. I'm going to be using the exact same expiration date because I want all of these to be at least around 2 years or further. So January 21st, 2028, 691 days to expiration. Now, we're going to go ahead and choose our strike price once again below the current share price. Now, the current price of MRVL, I think, is a very good price. This stock has dropped as well. Go ahead, check out the charts, do your own due diligence, and you will see that you're going to come to that conclusion as well. So if I were to go ahead and pick up this MRVL LEAPS option right now, I'll be choosing the $75 price right here. For the $75 price right here, I'm going to have to pay $29.75. Translated into the real world is going to be $2,975. At this current price point, this makes this easy for someone that's trading with a small account. They should be able to afford this LEAPS option. Now, the reason why I like this particular LEAPS option as opposed to the ServiceNow LEAPS option is because the ServiceNow LEAPS option, you buy it and you just leave it in your portfolio and you just wait for your investment gains whenever the share price goes up. With MRVL, we could use it to make consistent income while we also wait for the share price to go up. So the $29.75 it is. Now, once again, in order for you to win with this LEAPS option, the share price needs to go up, and then the overall option contract here is going to go up. Now, again, this trade could go against you because nothing is perfect. So the only way it could go against you is if the share price decides to drop down drastically. However, always remember, there is a reason why I went all the way out to 2 years. I believe strongly that after a 2 year period or between a 2 year period, that is enough time for the market to filter out all the noise that's going on right now. And by the noise, I mean all the wars that's going on, interest rates, all of that. 2 years should be enough to filter out all that noise. So whenever the share price decides to drop, do not panic. Remember your thesis and continue. Now that you have MRVL LEAPS option in your portfolio, this is how I'm going to use it to make consistent income. So I'm going to use this LEAPS option as collateral. So now I have collateral, I'm going to go ahead and add a strategy to this already existing strategy of the LEAPS option. So for that, I'm going to go to sell, I'm going to go to call, and now I'm going to change the strike date. I'll be going for a much shorter term strike dates because I want to make consistent income. So the date I'll be looking at is going to be March 27th, which gives me around 26 days. So roughly around a month expiration date. Now, this stock is in the semiconductor sector. So that means it moves extremely fast. And one of the most important reasons why I'm going to use this to make consistent income while I wait for my LEAPS options to go up is because of the premiums. It is paying some really, really juicy premiums. So it's a good stock that's currently down and is paying really juicy premiums. So that's a trifactor I really, really like. Now, if you are new to options and this is your first option strategy you're going to be trying, here's a simple rule of thumb. Based from the current share price, which is 81.26, and this is the semiconductor sector, I'll simply be going for 10 strike prices above the current share price. So 10 strike prices from 81 should give us around a 91 price. So let's see, we have that. Yes, we do have the 91 right here. With the 91 strike price, because this is an income generating option strategy, you are going to be getting paid. The amount you're going to be getting paid is going to be $2.15 right here. However, in the real world, that's going to be $215. That is a very, very lucrative return. The reason I say that is because if you divide your $215 here that you're going to be receiving regularly, you divide that by the amount of money that you invested, which is going to be around $2,975, you're going to see your ROI or your return on your investment is roughly going to be around a 7%. That is extremely, extremely high. And that's one reason I chose this stock. Remember, because this stock is the semiconductor sector, it is extremely, extremely volatile. So just be careful when choosing your strike prices. Now, remember another thing, the reason why I went ahead and chose the $91 strike price, which I mentioned is going to be 10 strike prices above the current share price, is because if the trade goes against you and this share price happen to just blow past your $91 price here, then it's not all bad because you're still going to be winning. So this is how you're going to be winning. The difference between the 91 here and your $81 price that the stock is trading at when you purchase your LEAPS option, that's going to be $10. Always remember, this is options we're dealing with. So you're going to multiply your $10 by 100, and that's going to give you $1,000. So $1,000 is going to be the gross amount of money you're going to make if this share price happens to blow past the $91 mark right here. Of course, if everything else remains constant. So there you have it, investors and future investors. So before I go ahead, I want to know from you guys, Is MRVL or ServiceNow a stock that you guys will be trading with your portfolio? And if not, what stocks are you using in order to do LEAPS options right now? Now, for those of you that made it to the end of the video, you guys are the real investors and future investors. If you have not already, now would be an excellent opportunity for you to go ahead and subscribe to the channel. Remember to like the video. If you are watching this via a mobile telephone, it'd be a good idea for you to go ahead and turn on your notifications to get alerted whenever I post a video, and I do post quite often. Remember, if you need any help with options trading or you want to see exactly what I'm doing with my portfolio and how I'm getting consistent gains, consider becoming part of the consistent income team. Now, lastly, the whole point of me making all these videos and putting this free content out there is because I have first-hand knowledge of the power of options income. I have been doing this for quite a while and I've been able to make consistent income. So now I'm trying to help people get into options trading. So if you guys know of anyone out there that's struggling to grow a small account portfolio, the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.